New sound today. Good morning. Welcome back to the Coinbase Institutional Markets Call. It is Tuesday, August 22nd. My name is Joshua Pak. I'm a trader here at Coinbase, and I have the pleasure of being your host. Following a quieter summer for our market, those who complained about a lack of volatility and boredom certainly got the jolt they were looking for last week, with deep swings in price action seemingly catching many off guard and wrong-footed. To give a quick rundown of what we're thinking for today, we're of course going to spend some time digesting last Thursday's price action with a market update from Georg. He'll also give us a run through of all the other interesting headlines and price action that has caught his eye as well. We're then going to turn it over to Greg, resident expert here of the Flow Show on the trading desk, who will chat about the desk's flow picture and what he's noticed last week, as well as other interesting broader market trends across not only crypto, but traditional markets as well, with some key earnings on the horizon. And we'll close this week's discussion out with Sid, who's going to discuss FriendTech and the explosive interest it has generated. I've personally been wanting to learn more about this one and decentralized social tech in general, especially following our conversation with Van Spencer last week. So I'm looking forward to hearing Sid's take on this one. Before we get started, a quick reminder that if you are watching on YouTube, don't forget to scan the QR code below to get access to all of David's fantastic market research. And if you are a podcast listener, this information is posted in the show notes. Spreading the crypto message and the many ongoing market trends is a passion of everyone here on the call. So please don't forget to hit subscribe and rate our discussion, which is really the best way for others to hear more about us and our podcast conversations. With those things out of the way, all right, let's get it kicking. Georg, last week was a nice deviation from the quieter summer we've all been complaining about. Walk us through it.
Yeah, nice deviation is one way to put it, unfortunately, in the wrong direction. But as you say, super interesting price action. And I do think that the sell-off took a lot of people by surprise. But if we do a post-mortem in terms of what has actually happened, it essentially started as a synchronized sell-off in equities and in fixed income. And equities were actually catching up with fixed income, and also negative China headlines as Evergrande declared insolvency, and then we had some more news hitting the tape about a slowdown in China and deflation getting exported out of China. On the fixed income side, the U.S. Treasury is set to increase longer-term issuance for this quarter. So I think David talked about it a couple of weeks ago in our call here. And that essentially led to the 30-year now trading up to 445. So it's the highest level since about 2010. And we actually also have seen some steepening in the U.S. curve. So the 2-year, 10-year spread steepened by about 40 basis points. Still negative, minus 65 basis points, but definitely a significant move. So equities essentially catching up with that. And then the sell-off in risk assets essentially triggered perp liquidations on across all exchanges, but primarily the main culprits were Deribit and OKX this time in terms of where the lion's share of liquidations has happened. So those two exchanges accounted for about 50% of all liquidations, while actually if you compare that to their share of the open interest in the overall market, it's definitely over proportional, given that open interest share only stands at around 20%. Then essentially we hit or lost a couple of important technical levels. So if you look at Bitcoin, 28.5K was a very important support in the market, coinciding with the 100-day moving average. So that level was broken, and essentially it led to an acceleration in the sell-off. And then we got that liquidation cascade that brought us where we are now. And essentially all segments were being hit quite hard, whether it's DeFi, Web3, or meme coins, with we have very few exceptions, like Optimism is one of them. Obviously been quite popular surrounding the broader ETH ecosystem plays and base narratives as well. But generally a lot of red across the whole space.
Thanks for that, Georg. So we, of course, know, and you just mentioned this as well, perp markets are essential to watching price action and potential positioning levels. So what have you seen this week in terms of funding and open interest, and how does the market look to be positioned following Thursday's action?
Yeah, so total global open interest during the sell-off, according to data from Levitus, dropped about 15% to around $35.5 billion. And we've been going sideways essentially for the last 4 or 5 days now after the majority of that move has happened. And then the majority of that drop, if you drill down a little bit further and zoom in, actually happened within perps at the usual suspects like Binance and Bybit. Given in absolute numbers, these are obviously the largest exchanges on the perp side. In terms of funding, before the crash, in BTC, the open interest weighted funding rate for Bitcoin was around 11 to 12%. And during the crash, we went briefly down to around minus 11%. But then we've been oscillating just around zero for the last couple of days. In ETH, the dislocation has been, and volatility has actually been somewhat higher on some exchanges. So again, if you look at global open interest weighted funding, we were before the crash around plus 10% annualized in ETH, and then we went for a very brief period of time down to minus 25%, but have been similar to Bitcoin and resetting and then oscillating around zero. In terms of the positioning, I think it was relatively low, but I would say just given the ETF narratives over the last 2 months or so, it had increased a little bit, maybe compared to like 3-4 months ago. But now, obviously, a lot of that has gotten washed out. So I think, sort of to sum it up, I think the positioning is very low, probably lower, even lower on the TradFi side compared to the crypto native side. So I do think that, you know, if there's any significant positive news, that could definitely lead to a strong rally in the market.
Nice. Yeah. Wow. Those are some big swings in perp funding. I didn't realize intraday that it went being from pretty positive to so negative so quickly. I'm sure the volatility guys, or the volatility players rather, are quite happy. Greg, bringing you in here as well. I know we've heard a bit from George on crypto's move last week. I know there's also been a lot of talk about rising rates in the US. We, of course, have Jackson Hole coming up at the end of the week. What are some other macro conditions that help fuel the fire lower in crypto last week from your view?
Yeah, so really the story in macro is rates, as it usually is. The market's coming around to higher for longer. Yes, inflation's coming down, but the Fed has said they're concerned that it could reaccelerate. And so they aren't in any rush to cut. Furthermore, you know, economic data in the US is decent, which suggests that the economy can handle higher rates. So the math kind of works something like this. You know, if we get to 2.5% inflation, you add a 1% real rate on top of that and a 1.25% term premium, that gets us to a 10-year of around 4.75%, which, you know, you can see on this chart here, we're at 4.3% now, which is significantly higher than, you know, the rates that our global economy has gotten used to in the last 10 years. So, you know, what this basically means is that if the world needs to wake up to, you know, 4.75% or 4.5% 10-year, everything is going to need to reprice, including crypto. And I think it's one of the reasons that, you know, the market finally broke lower last week. You know, for so long, we had this very low correlation to risk assets. And, you know, we had the S&P selling off, we had rates selling off, and then finally, you know, everything just gave way, and Bitcoin and ETH were down a quick 10%. So from here, you know, we'll have to see. We obviously have a number of catalysts on the horizon that could take us higher, and I'm very comfortable with how positioning is now. So yeah, it's an interesting place to be in right now.
Yeah, I definitely agree with you, Greg. Higher for longer is definitely the big theme here. We actually had some pretty public figures like Bill Ackman, for instance, calling for 5.5% in the 30-year quite publicly. And, you know, if the Treasury focuses on issuing longer duration bonds, I think it's definitely possible. The other elephant in the room is really, I think, that if you look at the breakdown of the maturities, or sort of the average duration of the Treasury book, half of the US federal debt, so around about $16 trillion will mature in the next about 2.5 to 3 years. And with the US deficit ballooning as it is now, the question to me is, you know, what will happen with this and how is this sustainable? So in the longer term, what this means essentially is two things to me. Outside of this, if you look at the shorter term to medium term, like of the ETF talk and the grayscale narrative, which are bullish stories for crypto. But outside of that, if you look at the longer term, I think there will be essentially we will struggle with rates that high, which to me in turn means, like if we get a harder landing or the economy starts to show weakness at some point in late 24, what's starting to get priced into the curve or in 25, rates will have to come lower, which will be super bullish for risk assets in crypto, as we discussed with Vance on last week's call. But also, I think if you look at the overarching thesis of Bitcoin and crypto as a financial system hedge, I think that could also definitely acquire a new quality in this context in the longer term.
Thanks, George. Yeah, interesting. I also saw that there was some stats around Treasury data that showed that the value of Treasuries owned by Japan and China, which were massive holders of U.S. Treasury debt, had also decreased. So I think in general, if yields go too high, I feel like there's this idea that now the story could change where we could start seeing some cuts on the horizon, which would obviously be great for crypto. Greg, what else are you watching or waiting for this week on the macro calendar?
So, yeah, it's really Jackson Hole is the focus. That starts Thursday and runs through Saturday. Everyone will be basically listening to see what Jay Powell says about rates. Does he think we're in a higher for longer environment, and what would it take for him to cut rates? Now, last year he used this stage to reset expectations, and we saw U.S. equities and crypto sell off quite a bit into the fall. Generally, stocks and risk assets do well after Jackson Hole, so it's a little bit of a coin flip, and we'll have to wait and see what he says. Additionally, we have NVIDIA earnings tomorrow. Now, NVIDIA basically sparked this massive rally in AI stocks earlier this year. The bar is relatively high for them. If they beat expectations, we could see tech continue to trade higher once again, which would, I think, help crypto markets. But on the other hand, if they disappoint, I think we'd see some of the air continue to come out of that tire, which again might weigh on our markets. So those are the two things that I think we're going to need to keep an eye on from a macro standpoint this week.
Yeah, interesting. I hope that, I agree with you. I think that whether it's correlations, I know there's a lot of discussion around that, but I think in general, watching how tech trades will obviously have sentiment indicators for our market as well, even though they do seem to be entirely decoupled. And nothing, like you say, it's nothing like watching the TV and the tape for some Jay Powell headliners. I know that is something that we will all be talking about as those things hit. And an additional consideration here, in my opinion, is that I think that the big dragon in the room, and one that we've spent a lot of time also chatting about, is just in general what's happening in China. I personally feel that there are it's such a challenging macro environment in China. Chinese GDP has enjoyed massive growth since opening up its economy. So I think in general, anything that happens in the issues around Country Garden Holdings, the Evergrande Group that George has talked about as well, like those all have huge implications for our market. And I think that the way that I could see that going out is that as the PBOC really begins to respond with easing conditions, it feels like we could see really two distinct outcomes here. With the China situation, one is that we could see fear of a contagion and broader market concern, which could lead to, generally speaking, risk-off sell-off sentiment, which would impact, in my opinion, all high beta sectors at scale, and crypto would not be immune. And I guess the second way to look at it, especially heading into Jackson Hole, is that I feel like good news, or bad news rather, could become good news. And I feel like the Fed, if they were to ever make a statement or a comment about referencing what's going on in China, I feel like market participants could look at that as an excuse to put rate hikes on hold. I'm curious, George, Greg, do you guys have any thoughts on whether or not, this idea of bad news being good news, like, is that a possible thing that you all are watching for? What do you think?
So, yeah, I'll take the first crack at this. China's, obviously very, very important. It's also very interesting. It's a heavily indebted economy. I think we have a slide on this. And it's slowing. But so total debt to GDP in China is near 300%. So that means that its typical playbook, which is, invest in infrastructure when things are slowing, isn't going to work as well going forward. And I've been trading, a number of macro assets for a long time. And I remember, 10, 15 years ago, traders started talking about these ghost cities. If you go on YouTube, you can find some interesting clips. But basically, China would build things it didn't need to boost domestic growth. Now, you knew this was going to be bad, but it was impossible to time. Very similar to the U.S. fiscal situation that George remarked on earlier. We know that's going to be bad, but again, impossible to time. For China, it looks like that time, might be coming sooner rather than later. Now, what does that mean for crypto? Well, initially, I agree. I think it would weigh on crypto. Asia as a region trades a lot of the asset, and if the largest economy in the region, second largest in the world, slows down, that would be a headwind. If you own some crypto and you lose your job, you likely sell that. Or if the local stock market sells off, you may sell your crypto. Very similar correlations that you see in other parts of the world. But longer term, it could be a tailwind, right? As indebted economies slow, their currencies weaken. And we're seeing this, now in China. If we go to the next slide, actually, we can see that the renminbi is, really knocking on the highest levels that we've seen in some time. So, if this continues, China may start to see capital flight out of their country. At some point, people will likely want to own real assets, Bitcoin, stable coins, other crypto are real assets to some folks. And so they may see inflows. So, really a tale of two sort of opportunities here, or paths. I think initially, could weigh on our market, but longer term, we could see that thesis that crypto was really born on play out here.
Yeah, I agree with Greg. I think, if you look at the big picture, China is definitely hitting some growth issues that every country that has been on a similar growth trajectory has at some point hit, that is sort of using a high savings, high investment model. And continuing with this model past the sort of natural absorption threshold for investments has led to a lot of this investment being unproductive, as Greg said. So essentially, it's your proverbial bridges being built into nowhere. And this has led to these massive asset bubbles, like, for instance, in real estate in China, which is the largest asset class in the world, actually. So I think it's key for them to, raise domestic demand and consumption to fix their economic problems. When it's obviously easier said than done. If you look at the GDP breakdown, 44% of Chinese GDP is investment, and this is obviously both unprecedented as well as unsustainable. And investments, if you look at the last 30 years, they have been productive pretty much until roughly 10, 15 years ago, when productivity levels have started to drop pretty significantly. And before that, essentially, it was not an issue because you could just keep increasing debt. But because your GDP growth was higher than your debt growth rate, like, for instance, in the early 2000s or in the 90s, that was not an issue at all. But sort of long story short, I think obviously the slowdown there is bad for the real global economy, especially if, although on the other hand, I guess you could argue like a little bit of deflation is not that bad. But then, I think the danger is, and you can see some of the impact already actually in countries like Germany, which the FT actually just ran a big story about saying that Germany could be the sick man of Europe nowadays again, because Germany has a very strong export sector, a lot of exports going to China, and it's actually been really weighing on the German economy, for instance, the kind of economic problems that you have in China. But yeah, I also agree with Greg that, so there might be capital outflows. Some of that may go into crypto and perhaps into Bitcoin in particular. But the question is also how hard will the Chinese government work to prevent that, and how easy will it be for those capital outflows into crypto to happen?
I agree. I think that the thing here is that also that, of course, China is a restricted currency pair, capital outflows. and watching how that capital flight takes place in reality, I think will be difficult to see. But I think what is interesting is that given everything that we've talked about here, with the region seemingly opening up to crypto, it'll be interesting to see, like, do we start to see that Asian bid, especially during the tail end of Pacific hours, for instance, that I cover, like, will we start to see kind of that pricing premium start to take place on other exchanges or on Coinbase even? It'll be interesting to watch for. With that, I think, thank you, George, for that update. Thorough as always. Greg, moving back onto you and the flow show. What interesting flow dynamics are you noticing recently?
Yeah, so flows have been pretty interesting this week, especially post the sell-off late Thursday night. Generally, we'd expect momentum to continue and for traders to position for further weakness. We haven't really seen that. For the most part, on our desk, we saw folks looking to take advantage of the move, and actually came in to buy crypto, namely Bitcoin and ETH, the majors. And I think that makes sense because we're now back at the levels we were before some of this ETF news really hit the tape. And we still haven't heard a decision on the Grayscale case. Each day we get closer. And if we want to use the GBTC discount as a market measure for Grayscale's chance of winning, it hasn't moved materially since last week. So we've had this big repricing in spot, but the market's probability that there'll be a favorable outcome hasn't changed. So I think some people are seeing that as a pretty attractive setup here. And if they weren't allocated, are using this opportunity to maybe put a position on.
Yeah, thanks for that, Greg. I feel like there are still so many, I was looking too as well, like following the Ripple news, it seems like we've given back a lot of those gains. So it is interesting to see that the market has repriced itself. It seems like this could be an interesting entry point, which I'm sure other people are thinking as well. I'm just curious, like, what are you seeing, I guess, in the options market? What is volatility telling us? In general, we've seen that vol has been very subdued. So what are you seeing in terms of option skew?
Yeah, so positioning across the different markets, we are sort of getting some conflicting signals here. If you look at the options market, there's a slide up for those that have a video. For the first time in a while, we now have a positive put skew, meaning puts are costlier than calls. So people are paying up for downside protection. And in Bitcoin specifically, it's really the $25,000 strike, both September and December, that folks are buying most aggressively. But if you look at term futures across both the Coinbase derivative exchange and the CME, the September term future for Bitcoin is still trading a positive 6%. So that tells me that there is some length in there, and folks are sort of positioned for upside. So I think what's going on is, you have traders understand that this Grayscale decision could come any day. They want to be positioned for it, and they're doing that through futures, which is a leveraged product. But at the same time, they want to protect themselves on the downside, so they're owning those 25 delta puts just to kind of protect their book. If we don't get the decision that we hope for here, or if the seasonalities come back and bite us, and the whole market moves lower.
Yeah, thanks for that. It seems like Grayscale, that's the big event to watch for. I know crypto Twitter has been busy trying to guess when that news is coming out. Is there any sense of like, do we know at all, like when we're expecting any sort of judgment?
No. So there's been some folks that suggest that we're more likely to hear on a Tuesday or a Friday, because that's when the courts release these decisions. I don't know if that's the case, though. That's just what I've read. But really, I mean, it's up to the courts. They manage their docket. So we could hear today, we could hear this week, we could hear, end of September. There's no deadline. It's just something that, we get to come in every day and hope for.
Understood. So Tuesdays and Fridays, market calendars. Thanks, Greg. Always helpful for that. And now turning to you, Sid, closing it out. Sir, so much going on in DeFi. I know, I can't wait to hear you talk more about FriendTech. So I guess at a high level, what is it? How does it work? And why has it caught on so quickly?
Yeah, it's pretty much the killer app of this past week. It's been absolutely bonkers, the kind of numbers it's been doing. So what is it high level? It's basically a social app where folks can link their Twitter X accounts and install it. It's actually the workflow is where folks sign up on their mobile browser, and then they add it to their home screen on their mobile, and then they link their Twitter or X account, and then essentially after you're signed in and logged in and have linked your account, you can then deposit ETH into it on Base. This FriendTech, the app lives on Base, and essentially what you can do with that ETH is you can buy and sell shares of other accounts. And the shares was a terminology they were using for the past week. Now it's been rebranded to keys of accounts. And what do you get if you buy a key of an account? You basically get to have access to a private chat room of that account, where that account can post to all of their key holders, and it's kind of a community group chat effect over there. So it's caught quite a lot of fire in terms of activity and signups. Over 94,000 unique addresses have signed up, and the platform as a whole has done $63 million in volume so far. For folks watching on video, there's the graph is basically up and to the right in all metrics, and effectively, what's been fueling a lot of the speculation is the social aspect of it. Inherently, a lot of folks on X are kind of incentivized to advertise or shill their own shares or keys, because effectively what happens is when more folks buy a certain individual's keys, the price of each key goes up due to a bonding curve linked to the platform. So this is kind of the same formula across every account at the moment. So basically the most popular influencers and users of crypto Twitter have garnered more keys of their own accounts to be bought. And folks have been kind of advertising all sorts of use cases for keys, potentially access to, alpha before they advertise on Twitter, or other kind of access to exclusive events or chat rooms or things of that nature. But, it's still kind of a work in progress what the use cases of these keys will be. And it's up to the creators to kind of drive that. So, and the most interesting part especially is fees. So there's been, $63 million of volume. There's also been $3 million of fees generated by the platform. And how fees are generated is basically 10% of every buy or sell of a share is taken as fees, and a majority of that basically goes to the key holder themselves, like so the owner of the account. So some of the top crypto Twitter holder users like Kobe, Saka, 0x Racer, etc., have all garnered over $100K USD worth of fees over the past week, which is pretty tremendous. So this is the state of affairs with FriendTech at the moment.
So that's super interesting. So if I understand it correctly, this is really a way for, if I have a large following, which I don't, on Twitter or X, I can now monetize that following. So, I earn fees because they follow me, or Kobe earns fees because they follow him. Is that right?
Yeah, basically. So it's a little bit of a twist on another like Web 2.0 app, which is OnlyFans, where folks can subscribe to creators. But here it's a little bit different in the sense that you earn fees when folks trade your shares or your keys, not necessarily as a subscription format. It's kind of only when the trade occurs. So it's almost you want to incentivize your folks to trade your keys around.
That's super cool. So this is really this is the first real Web3 app that, I can think of where we're actually taking, the economic model and handing it over to the content creators.
Yeah, definitely. At least the one that's kind of caught the attention of public consciousness to such a degree. There have been previous attempts at it. As George mentioned earlier, there was a very popular app called BitClout that launched a few years ago, tried a similar kind of dynamic, and there's been other attempts in different arenas and different blockchains. But it seems like this kind of magical, sequence of factors, and then the launch of Base and on-chain summer with Coinbase has kind of managed to capture the attention of the crowd at the moment, and pretty staggering numbers to show.
Interesting, Sid. So just to build on what Greg just mentioned, so to increase the trading of yourself, so if you're getting paid and you're monetized based off of trading activity, is there a way here for an individual to kind of create that churn by buying shares of yourself, share buybacks in your own name that increases that trading volume? Absolutely.
So this has already been enacted by a few influencers where they've announced on their private FriendTech chats that they will be initiating a buyback at X time, for example, or they'll be buying X amount of shares or keys at a certain point of time. And in terms of this trading behavior, what's been interesting is it's also bled outside of the app itself because of it's built on blockchain rails. There's an element of composability to it. So folks have made friend perps to have an index of all top FriendTech users, and for folks to speculate on the price of that, and folks are shorting, longing, et cetera, collecting funding on it. So there's derivative products on this as well already that have popped up, which is drawing significant attention.
I love our market. Just our ability to create securitized products on a whim is just incredibly is just so cool to see. I saw there was also a headline or two around scraped user wallet data. I know that there was potentially some security concerns that were voiced on Twitter. Could you talk about this and whether or not you see this as a roadblocker to the product's growth?
Yeah, so I think one thing to keep in mind and to note is one of the reasons this app kind of stood out from the fray is they used a kind of novel user acquisition strategy where folks would open the website on their mobile browser and they would add it to their home screen, kind of bypassing the Apple App Store's kind of limitations against Web3 apps collecting fees, et cetera. So, in order to link to the social account, the app asks for permissions to post on your behalf on X when you're initially signing up. So folks did bring that up as a security kind of concern. But basically, one can, if you have a FriendTech account, you can revoke that permission once you've created it, and it still works fine. So that part is mitigated to an extent. And then in terms of wallet scripts, there has been some news articles recently. So to draw light to that, basically what FriendTech does is it generates a new address for each user that signs up to the platform, and then folks can deposit to that address. So, and this generated address linked to the Twitter URL of the user is available in a public API, so folks can scrape that, and it is available. Where it becomes worrisome in some extent is folks potentially doing on-chain analytics to link the funding address of that the FriendTech address and potentially linking to other addresses that users own. But other than that, it is actually intentional. It's not private data or anything like that.
Understood. Thank you. Thank you for walking us through. And just, I guess, to close this out on the FriendTech bit, just as a general question, looking at FriendTech, for instance, how do you make sense of those reported user numbers and kind of the accuracy of some of those like, it seems like that is a lot of active users that are purported to be on the platform. Like, how do you make sense of those numbers?
Yeah, to some extent, it's hard to obviously evaluate the true extent of each one of those numbers and see how many are exactly real human beings. Part of it is mitigated by the fact that you do link to X accounts, to Twitter accounts. But the other part is, a couple of days ago, there was an announcement that FriendTech had raised a seed round from Paradigm, which is a leading VC in the space. And they also announced that they would be, every week, they'd be doing airdrop points for users. These aren't tokens by any sense, but they've stated that these points would have a use in the future. So folks are speculating that they will airdrop a token eventually. So obviously the whole airdrop Sybil farming crowd is also engaged here to try to have activity on the platform in general, just in case they do airdrop a token. So I think there are a few of those factors involved. But generally speaking, even with the metrics we're seeing on Base, there's a significant amount of active users, and a lot of them are using FriendTech. So I think a lot of these numbers are closer to accurate than not.
Very impressive. Very, very impressive. And it just seems like it's been all that so many people have asked us about and such a big topic of conversation. So thanks for walking us through that. Sid, I also know there were a lot of rumblings in NFTs as well. I saw that Mark Cuban got into the fray with a couple of tweets. So what's the issue at hand here?
Yeah, the rumblings kind of seem to be around NFT royalties. It's been quite a lot of back and forth on this subject. Basically, the key piece of news here is OpenSea, the NFT platform, trading platform, was announced that they would be dropping mandatory enforcement of like creator royalty fees on NFT sales. And this was kind of one of the key promises for creators of NFTs, in that they would get royalties for any trades that were done on their NFTs that they had created. And there's been some backlash on this announcement. Yuga Labs, the underlying creator of Bored Apes and Mutant Apes, fought back against this and said they would cease their integrations with OpenSea and moving forward. The big competitor to OpenSea in terms of the marketplace is Blur, which also is facing issues of its own in terms of its TVL dropping over 50% since the month of June. It's kind of airdrop farming campaign is kind of drawing to a close. So the NFT world in general is in a bit of turmoil. Floor prices have crashed by 70% plus for most projects. So we'll see how this shakes out, but that's the current state of affairs.
Yeah, interesting. I saw that the Bored Apes, I think that the floor price had hit was it 26 ETH, something of the sort, and had just fallen dramatically. With that, so wonderful. Thank you so much, Sid. And to close us out, that is a wrap for this week's episode. And a mega thank you to everyone who joined us this week for our discussion. We hope you have a wonderful rest of your week and see you at the same time next Tuesday.